Good afternoon, everyone. I'm Jan Speelman, the founder and CEO of Fidamy. Fidamy is an embedded insurance operator that helps other businesses in creating and offering insurance solutions to their customers. And I think with insurance, we are a little bit odd one out in the topic of embedded finance. Didn't pop up during the presentations earlier. And I think I know why, because who here in the room likes insurance or gets excited about it? A few of them. I didn't initially, so I've been spending 6 years at the Boston Consulting Group and 6 years in fintech startup scale-ups that were focused on payments, cash flow, and I heard many of the topics on embedded capital, embedded payments passing by. And I consider insurance myself a bit as a necessary evil, something that you have for a few things, but apart from that, you don't really like it. I ended up launching a business in insurance, and why is that? It's because actually I think insurance can really be a value driver for businesses if done properly. If we think about the consumer today, we touched upon it briefly, they want on-demand services, on-demand products. They want things that are relevant for them, relevant propositions, and whether it's about insurance or capital, payment solutions, they want to have what they need at that moment in time. They want to have it personalized so that it's relevant again for their context. It needs to be super simple to buy, super simple to use, and easy to understand, which is a topic that in the insurance context is relevant given complex T's and C's typically. You could tell me, Jan, there's been many businesses that are offering insurance already to their customers. Think of KLM offering cancellation insurance where you book a flight. Think of Coolblue offering laptop insurance in case you buy a laptop and it gets broken. And that's absolutely true. We didn't pioneer this at all. I think one thing that you do see is that there's a fundamental shift taking place from the traditional way of doing things towards the more modern one, embedded insurance 2.0, if you will. So initially, or how KLM, Coolblue are doing it still today, is with a more complex setup where a lot of the insurance complexity, regulation, compliance topics have to be dealt with on their side. They work with an incumbent, which typically means that they're slow processes. Changing a price, changing a product takes easily 6 months' time, and it's very static. Whether you fly to Thailand or whether you fly to Belgium, it doesn't really matter. You get the same coverage, you get the snow search and rescue cover, even though you're not going to the mountains, etc. So because of this is fueling the idea of insurance is not really a value add and more of a necessary evil. If we look at today and the movement or the wave that we are currently in, it's much more about how can we offer insurance as a service through providers like, for example, Fidamy, that can help in orchestrating things, that can offer the technology, insurance knowledge and know-how, licensing, compliance matters, so that our business partners, and whether that's an e-commerce store or a neobank, traditional bank, can focus on their customers and think about which products, which solutions really help our customers and therefore us, whether that is through generating more revenue, winning new customer segments, improving loyalty and NPS. And so the total potential of this movement that is going on is quite significant. So it's being thought that the embedded insurance space will take about $2.5 trillion by 2032. Half of this amount, more or less half, will be coming from cannibalization on existing business, basically moving the point of distribution closer to the point of purchase. The other half, and that's where it's getting really interesting, is new business that's being generated. Because we can leverage technology much more than before, it becomes better possible to create and offer new insurance propositions at much smaller scale with unit economics that are actually in a traditional context not very doable to work with. And so if we zoom in on European non-life business, it's $181 billion opportunity just for the embedded space. What we see is that the blue one, the traditional bank insurance, stays rather stable. It declines a little bit, but stays rather stable. If we would zoom in on this one, actually we see two things happening. The traditional setups as we know them will decline, and there's a shift towards more modern setups, if you will, where there's orchestrators who step in, who can offer technological capabilities, platform, offload some of the complexities that today are very much there in order to help banks in stepping up their game in this regard. And so, to some extent, that was also the title of the presentation. It's a threat. It's a threat to the traditional bank insurance model and the offerings, insurance offerings through banks. At the same time, it's a unique opportunity, because embedded is much more than purely a distribution channel, in my view. There's also a product component. Like, how can we think about new products that are more relevant to our customers? We have this all-risk travel insurance, but maybe we want to differentiate between someone flying to Asia versus flying within Europe. Maybe we can leverage banking data, transaction data, in order to trigger people on, hey, do you need a certain cover? You're in Schiphol right now, you don't have travel insurance. We know that you booked a flight or made a payment to KLM a few months ago. You might be traveling right now. This might be a trigger to engage with the customer and basically help them in getting covered for something that they might not even realize they're not covered for. Another element is tech and data. You can leverage locations, you can leverage weather data, existing customer data in order to offer a customer with a more relevant proposition at the moment in time that it's also relevant for them. And lastly, operations. A lot of the value of an insurance is not in the moment when you buy it, but it's on the moment when you have to claim it. Streamlining this operation, making it easier, faster, more data-driven, which allows you to ask less questions about the claim and be able to pay out with much more confidence, is also something that plays a big role. I think as embedded insurance moves on, people will have much more individual policies with random businesses. And here, I think there's a huge banking opportunity as a trusted financial advisor still to customers and one of the core financial partners they engage with, to potentially provide an overview. Look, you're covered here, 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 and here. We might have a better solution for you. Instead of having 5 individual mobile equipment insurance products, we can offer you one that covers everything in your house. And these are things to think about, consider, and maybe take action on. Some real-life use cases we see, especially in Asia. I'll go through them rather quickly, but one is on cancellation insurance. We know, or we can know, when your flight is cancelled or delayed. So why ask a customer to make a claim, file a claim, and then getting money or compensation 2 weeks, maybe even longer after the fact? We can also proactively inform them about the fact that their flight is delayed. They'll probably know, but inform them about the fact that they'll get the compensation real time on the spot. For every minute of delay, every 15 minutes of delay, we give you amount X. You don't have to claim it, you get it because it's your right. You paid for it. Another one has more to do with the mindset towards an insurance product. You could be much more focused on the sales element of it. So there's a bank in Asia that is offering the insurance proposition online, having ads for it, and pushing it to their customers. And then getting back to the relationship point of earlier, they use their offline touch points in a branch, contact moments with actual people to let their prospects ask questions about it, inform them about the proposition, and then in the end push them back into an online funnel or more digital funnel to make the actual purchase. So I think technology now also allows to really do these things omni-channel instead of just in a more traditional way. It's in our app and that's it, or we discussed it during a conversation, but that's also good. And here we have a business, again in Asia, that is offering insurance credits for every purchase that you make, or for specific objectives that you've achieved. If you walk your 10,000 steps, then you get X amount of insurance credits, and these help in covering your basic health insurance, for example. So this is a way to think about leveraging insurance as a measure or a metric for loyalty, driving loyalty, and really rethinking the way that currently we think about insurance products, which is, I have this potential issue, I buy that specific product, and that's it. And then lastly, if you look at the neobanks like Revolut and N26, they all have insurance, or practically all of them have insurance into their core offering. It's not something that you have to buy as an individual product, but it's part of the packages that they sell. In the free package, there is no insurance included, but as you upgrade and pay every month a little bit more, there's an insurance fee in there. For some, it's linked to transactions, so as long as you pay through your Revolut card, you're covered. For others, it's part of being a member of the bank. As long as you have your membership with us, irrespective of whether you made a payment through us, you're covered. But now, if you want to proceed with this, do you build this yourself? Do you engage yourself with an insurance company and launch products like this? Do you buy a business that is being doing it, or do you partner? Fidamy is being launched in close collaboration with NN Group through the NN Ventures venture builder that was launched last year. Because of one reason, and actually one reason only, they tried to build it themselves, but it was too hard. Innovation within a large corporate, especially a regulated one, and especially on a topic that might not be core, is very, very tough. Because it's too easy to kill it. There's too much of a corporate mindset to approach the problem. People are not comfortable with seeing red figures for 3, 4, 5 years, and that's what it takes in order to set it up. So that was very, very tough. Buying a business that's already doing it is also tough. Are you buying the right asset? Is this the winner in the category, and will it really help us? Am I paying a fair or right price? And once we bought it, what will happen? If we buy more than 50%, we have to integrate it into the group consolidation, which means that IT policies, HR policies needs to be pushed onto these businesses, and that slows them down and will at least affect the speed at which they can move forward. So we opted for a partnership approach, but that's also tricky, because is it the right partner? Is a partner sufficiently mature, financially stable in order for us not to take a risk as a bank? At the same time, if they are so stable, so financially strong already, it might mean that you're too late on the innovation trajectory. So it's a very tricky trade-off to make, and I think in line with what has been said, I think during every session or every presentation, irrespective of the path that you choose, and there's reasons for each of them depending on the context of your business, it's very important that it's not just the top management that is supporting it, but that there is also the operational work done to get it really embedded into the day-to-day ways of working. Otherwise, it's going to just remain a dream. So I think key takeaways for me: embedded insurance might actually have impact. It might not be a necessary evil. There's very interesting use cases to think of that can really help in driving revenue, loyalty, customer satisfaction. And how to do it, that's a question that needs to be tackled on a case-by-case basis. But I believe that partnering with smaller entities that have the backing, or that you can even provide the backing to have the stability that you need, could be a potential solution in which you can diversify initiatives and double down on the winning ones. Thank you.
Thank you. Are there any questions for Jan?
I do not know that much about insurance. but I saw the figure, if I understand it correctly, it's 16% that is embedded insurance after 2030. Don't you think that's a conservative number? Because I do think that insurance is specifically relevant in customer journeys, and therefore I assume embedded insurance is going to be used. So, first question, do you think it's conservative? And second, what's in the other 84%?
I hope it's conservative. That would only be better for the space. The reason that it's relatively small, 16%, is because it's right now mostly about smaller products. Mobile phone insurance, which costs 10 to 15 euros a month. Travel insurance, which is 50 to 300, depending on where it's a one-off or just for one event. You can think about weather-based coverages for an event that you're going to attend. If it rains, I get a compensation. It might only be €1 or €2. So there are very small premiums that are being paid or considered right now, compared to the bigger topics of car insurance, home insurance, life insurance, health insurance. But potentially they can also evolve at least.
Any other questions for Jan? No? So Jan, we will see you in the panel discussion as well. I'd like to invite Paul from the board, from Molly. We just have to change the setup.